The silver price just shot up and then it collapsed. And of course, all the silver bugs said manipulation, manipulation. That's wrong. What happened is that the Indian rupee fell by 50% in US dollar terms, and the price of silver went up by 200% in US dollar terms. So from the point of view of the Indian peasantry, the price of their silver went up by 400%. And that occurred in conjunction with a bad harvest in India, where the Indian peasants had a choice between keeping their silver and feeding their kids. Well, it was pretty straightforward. And a whole bunch of silver came out of inventory from a place that we didn't know it had been in inventory. If I'm right about the direction of precious metals prices, that the adjustment, if that's the right word, between the paper market and the physical market could be, maybe not will be, but could be much more dramatic than we believe.
Before we dive into more clips, make sure to smash that subscribe button.
The arithmetic around the silver squeeze didn't understand that they needed to be persistent and tenacious. In other words, that the unraveling of the dichotomy between the physical market and the paper market could take 5 years to unwrap. And many of the youngsters who were involved in the silver squeeze had a much more limited time frame. They wanted it to happen in 5 weeks or 6 weeks. And I suspect that many of them employed much too much margin. If you're paying margin interest for 5 years, if the event that you're hoping to participate in takes 5 years and you're paying 8% a year, you might not be early. You might be wrong. Yeah. Remember that a lot of the retail participation in the silver squeeze abdicated. They haven't held the silver for 5 years. When silver didn't meet their expectation, they liquidated in favor of meme stocks, in favor of Bitcoin, in favor of some other speculative asset. So 5 years would have involved them continuing to, in their parlance, stack. That didn't happen. They decided to take on the banks, and the banks kicked their ass. Let's get this straight. It doesn't change the equation. What the silver apes hope to cause to occur will be done by the market in the market's own time. It will take place, likely without the apes. I mean, the disconnect between the futures market and the physical market is as broad as it ever was. And the disconnect that we at Sprott faced, which is to say the temporary increase in demand relative to the system's ability to effectuate good delivery supply, is there. And we weren't big buyers. You'll recall that at that point in time, over the course of a year and a half, we probably accounted for $1.5 billion or $2 billion in demand. We were the players because we were the only instrument that took silver out of circulation. The ETFs ebbed and flowed on a daily basis. When the market replaces Sprott, which will happen, that really truly changes the equation.
In today's news recap, silver price surges to near $29.50 due to increased safe haven demand. Silver price extends its gains for the third successive day, trading around $29.60 per troy ounce during the Asian hours on Friday. This sustained rally is attributed to strong safe haven demand amid persistent geopolitical tensions in the Middle East and the prolonged Russia-Ukraine conflict. Axios referenced 3 sources, indicating that U.S. President Joe Biden reportedly explored contingency plans to target Iran's nuclear facilities if Tehran advanced significantly in developing a nuclear bomb before Donald Trump's inauguration on January 20th. These talks underscore the growing concerns over Iran's nuclear aspirations during the transition between administrations. A Financial Times report noted that the People's Bank of China, PBOC, anticipates an interest rate cut this year at an appropriate time. Traders are closely monitoring the potential recovery in China's economy and its effect on the industrial demand for silver. President Xi Jinping reaffirmed his commitment on Tuesday to prioritizing economic growth, promising more proactive policies to bolster China's economy in 2025. While China's manufacturing activity showed minimal growth in December, services and construction sectors have recovered. The data indicates that policy stimulus is beginning to impact certain sectors as China prepares for new trade risks stemming from tariffs proposed by U.S. President-elect Donald Trump.
If what happened at that point in time would have been accompanied by a liquidity squeeze, a market event like 2008, it would have been game over. If you would have seen credit restricted in the futures market against good delivery failures in the cash market, it would have been game over. Now, understand that you wouldn't have had a short squeeze like you'd have in a fair market. The LBMA would have declared something called force majeure, and they wouldn't have demanded settlement in silver. They would have cash settled. And the exchange, would have determined the cash settlement price, just like they did in the tin market. So part of the premise around the silver squeeze, which suggests that we had a fair market in silver, that the exchange isn't controlled by the dealers in the exchange, is false. That notwithstanding, people would have made a lot of money.
Yeah.
Understand, too, that the failure to deliver didn't reflect overall physical inventories in the silver market. It involved good delivery, silver, the silver that is the stuff of the paper futures, and the inventory that is required for responsible investment vehicles like Sprott Physical Silver. Over time, if institutional demand and retail demand for silver continues, what you will see is a dishoarding of informal silver, silver held by living, breathing human beings in the Middle East and in South Asia, and the reintroduction of that silver into the formal system, provided it doesn't happen all at once, provided it happens over time. And I think that this process probably accelerates. You're seeing a conversion of informal silver to formal silver in China, as an example. I think really the possibility for a cataclysmic break really has to do with how rapidly the market would be challenged. We were a catalyst that challenged that market, Chris. And to be honest with you, a fairly small catalyst. The fact that $1.5 billion or $2 billion in net buying had that dramatic an impact on the physical good delivery silver market let me know just how leveraged the futures market was. And that the fabricators, the people who are making silver panels, don't need LBMA good delivery silver.
Right.
They could care less. They are not fiduciaries storing it on behalf of third-party investors. They are people who are using metal for its reflective property. And to my knowledge, there is no major fabricator that is experiencing delivery failures. The supplies of industrial grade silver and silver alloys relative to the industrial demand is very much intact. That's still a very robust market. I think that you're seeing leakage from retail holders because retail holders are bored. They don't need it to make mirrors. And I suspect until you have seen sufficient momentum established by the gold market that generalist money comes in the silver space, that circumstance continues. It will continue until it doesn't. I realize that doesn't make a very good internet headline, for a video, but that doesn't matter much. Your viewers need to understand that precious metals markets are very much intact, that traditionally a precious metals bull market has the momentum established by the fear buyer, the gold buyer. And at some point in time, when the narrative establishes itself, either because of news flow or some other reason, that silver replaces gold as market leaders. I don't know where we are in the market. Nobody else does either, although some people pretend to know. I just know that this is a question where the answer begins with when, not if.
Yeah.
And if that answer isn't sufficient,